A massive sell-off of shares continues in Asia as Japan's Nikkei stock index briefly dropped to its lowest level since September. This follows a sharp sell-off on Wall Street as investors worry President Trump's aggressive trade policies could tip the US economy into a recession. The Dow Jones index dropped more than 2%, while the tech-focused Nasdaq lost 4%, its worst showing in more than 3 years. To shed some light on this, I'm now joined in the studio by our business correspondent, Mary Sina. Mary, what set this all off? Is this all about Trump?
Yeah, well, Trump ran an election campaign on promises to fix the economy, and that caused a lot of optimism. And for two reasons, that optimism bubble is now bursting. First of all, uncertainty about what Trump will do next, and secondly, tariffs. So this week brought increasing recognition of the fact that Donald Trump and his cabinet want to bring back U.S. jobs and U.S. manufacturing into the country, and they are ready to use tariffs to do so, and they will tolerate economic pain in order to achieve that goal. And people and financial markets aren't used to that, but they're now internalizing this message, and that's why we're seeing the stock market's reaction right now.
Talking about stock market reaction, there were first massive sell-offs in the US, then in Asia. What about Europe?
Right, there's this platitude that goes, when the US economy sneezes, the European economy catches a cold, and to some degree that holds true. So in Europe too, most major stock exchanges tumbled, in London, in Paris, and we saw that with tech stocks as well. So the US tech-heavy Nasdaq led the decline in the US, and we also saw tech stocks in Europe tumble, so people feeling less confident about tech businesses in Europe. But at the same time, markets in Europe are actually looking quite strong compared to the US right now. So it's not all doom and gloom, because investors are turning away from American assets now and towards Asian and European assets. So investors buying fewer dollars, for example, and more Chinese yen, more euros. And so the euro is actually up in value by 7% compared to February. And we're seeing a similar movement regarding stocks at the moment.
How will this translate back to the US economy? How will average Americans get to feel this?
I think it's always important to remember in moments like these that the stock market is not the economy. So with the stock market tanking, the average American likely won't feel this immediately, because it's investors and the hyper wealthy that really hold most of these stocks. But that doesn't mean it's meaningless, because what this shows is that there is a shift in the mood in the United States. Consumers and investors are increasingly uneasy about the economic future of the country. What that means is that people are likely, or could, hold on to their money more, spend less, save more. And the US economic activity is based 70% on consumer spending, so how much money people dish out. If people dish out less money, that could stunt economic growth in the future. So that's to say, right now, the average American likely won't feel this, but this does signal a shift in mood, which could be consequential.
Thank you very much, Mary Sina there, DW business correspondent.